What's up everybody, welcome back to FX Action Trader YouTube channel. My name is Chuan and I'm going to share with you my analysis and some of my thoughts for the upcoming market. So before we start, please make sure that you have subscribed to our YouTube channel and also you have followed us on Facebook and also Instagram. And I'll see you guys again after the intro. Alright, so let us start with this euro dollar chart. So as we look on the daily chart, what I can say is that last week, right after this bearish candle, market did not show enough evidence of downtrend or a trend reversal confirmation. Why did I say so? Because right after this bearish candle, what we can see is that market shows us a dodgy candle instead of another strong bearish candle or another strong bearish momentum to indicate that price is likely to go down instead of going up. And if we look to the left, what we can see is that market is actually respecting to this key level, which is also one of the previous higher low of the entire uptrend of this euro dollar. So if we look on the H4, we can see that market has actually broken this downtrend trend line. And if we identify again the key level on the H4, what we can see is that market has actually retesting this very important key level, but this is not a good sign for us to go for a buy trend, to go for a buy call yet, because market has not really break up of this important key level or important resistance level on the H4 chart. So what if we can just combine again the dots and we can draw an uptrend trend line here, and what we can see is that on this week, if we are going to look for a buy trade, the potential level or the best place for us to look for a buy trade is actually here, which is also the confidence zone between the neckline and also the trend line area. Let us go to the next chart, the pound dollar. Alright, so on the pound dollar on the H4, what we can see is that this strong resistance level has finally been broken up. Alright, and market is actually retesting this breakout. And what we can see is that if you look to the left, and we can see that market is actually at this key level, forming a double bottom. And if we scale our trade down to H1, we can actually wait for a potential buy trade at here, which is about 1.3647, or we can just wait for market to break up again of this important level, and then we can go for a buy trade. Let us go to the next pair, the New Zealand dollar. So on New Zealand dollar on H4, we can see that on H4, market has actually formed a downtrend, and market has actually going to retest this important resistance level, and this level has been failing to break through for a very long time of period. And if we scale down to H1, we can also see that there is another trend line being broken, and what we can see that there is also a chart pattern, which is a double top pattern, a very good confirmation of trend reversal pattern. And this double top meaning to say that we can look for signals or look for the chance to short this pair. So for me, I would prefer that market to retest again the neckline, and from here only I'm going to look for a short signal or a sell trade. Let us have a look on the euro yen. Alright, so on the euro yen, last week there is a very strong downtrend downwards here after the break of this sideways structure. Alright, let me highlight this sideways structure. After the break of this sideways structure, but somehow we can see that at this point level, 125 around 125.15, market fails to break below this level. And what we can see is that there is a potential double bottom being formed at this level, and this is a H4 time frame. So this is a very important sign of us. This is a very important sign that market is trying to tell us that the buyers or the bullish momentum is still in control of the entire market. And if we zoom out of the chart, we can see that before that, market is still in a very strong uptrend. All right, so on this week, if you're trading on an intraday basis, I would like to go for a buy trade instead of a short trade. All right, because for me it's very simple. This is a H4 chart, and this chart has shows me a very simple and a very important pattern of a buy trend structure, which is that market created a high level, and this high level was broken by the current price, and market has formed a new high level. So for this week, I'm going to focus more on a buy trade instead of a sell trade. So the next question that I'm going to ask myself is that where is the best place for us to place my buy entry? And normally we can go for two choices. We can either use Fibonacci to identify the best level for you to place your buy orders, or another method or another choice is that I'm going to look for the area where the resistance has become the support. So we can just highlight this level. So this level previously was a very strong resistance level, as you can see here, and now this level has turned into a strong support level. So I'm going to look for a buy trade at this level. So when I'm saying buy trade, I'm not meaning that when the price reach this area, I'm going to look for a buy trade. No, things doesn't work out like this. All right, when I say that I'm going to look for a buy trade here, is either that I wait for a chart pattern like the bottom is being formed here, or head and shoulder, or I can see that there is a price action in terms of candlestick is either a bullish pin bar or a bullish engulfing candlestick here. They're forming at this area, indicating that the bullish trend is going to continue, and from this point I'm going to place my buy entry. All right, I hope that this is clear, and let us have a look on the pound yen. On pound yen, last week I believe that most of us have already observed that the strength of the pound, and most of the pounds pair are heading upwards. So but this trade is a bit tricky for me for this week. All right, in overall we can see that market is still in an uptrend structure. All right, but one of my concern is that market has not break this H4 resistance level. So I will not go for a buy trade at resistance level. So the best level that I'm going to look for buy trade is either market pull back to the previous higher low at here, or market break out of this resistance level, market pull back, and from here I'm going to add, or I'm going to scale down to lower time frame to look for a buy entry. All right, in order to sustain in this forex trading or any trading business that you do, you need to remember that always not to look for trade when price has not shows you a very obvious or a very clear breakout or a very clear signals of trend continuation. All right, this is very crucial to all of the traders out there. All right, so the last pair for today will be going to be this New Zealand dollar. All right, so New Zealand dollar on H4, if we look on the overall structure, what we can see is that market has actually broken up of this trend line, but if you look in the bigger picture, this is a potential lower high that is going to form in a line with this downtrend structure. All right, so when we have a dot like this, let us go to the daily chart to look for a better signal. So on the daily chart, what we can see is that market has actually broken out of this important key level, which is also one of the previous higher low of the daily structure uptrend. So for me, I would go for a short signal instead of a buy signal. All right, so the safest way for you to go for a short signal, let me show you a better picture. The safest way for you to go for a short signal is that we wait for market to break this trend line. Alright, this is your option number one. As long as market break this trend line, we can go for a short signal as market pull back. So the second area that I will be looking for a short signal is that I'm going to wait for market to retest this previous zone that has a lot of sellers. All right, this was previous support zone and now has become a resistance zone. So I can always enter the market with a very tight stop loss just right above the zone, and I can maximize my profit at here, the previous low of the entire structure. So this is choice number 2. So the choice number 3 is that we can always mark up the high and low of the entire market. So if market break up above this structure, this means that market is going to continue in an uptrend, because on H4 we can see that market also show us some symptoms or some signals or some patterns of the uptrend structure. So if we're going to look for a buy trade, we have to wait patiently for market to break out of this week. All right, but if you're going to look for a short trade, my choice number 3, the option number 3, which is also happens to more conservative trades, we can wait for market to break below this structure, pull back, and market could not break above, and at here we can continue to look for a short trade. Right, this is a very simple way to identify trend, or a very simple way for you to enter the market with a higher winning probability. The reason behind this is that in order for a downtrend to be valid, market will need to break down of this low and form a new low. So when a new low is formed, this meaning that this downtrend structure is valid, it's a solid downtrend structure, and when the market pull back to this area, we can always go for a short trade. Alright, so that's all for my analysis for this week. I hope that you have learned something new and you like this video, and please share this video out if you think that this is useful and helpful for you, and I will see you guys again on my next video. Thank you and have a nice day.